And we're live. Welcome to Live with Liz. Today's guest is Mr. Keith Renno with Wintrust Mortgage. How are you, Keith?
I'm doing fantastic. Thanks for having me.
Yes, of course. All right, Keith. So you've joined me on Live with Liz a couple times, and now I was thinking, what valuable information can we provide the consumer out there, friends, people who are thinking about possibly purchasing a home or refinancing their home? And interest rates has been a big hot topic over the last year. It hit, all-time lows at the very beginning of the pandemic. Interest rates are hovering still at, very close to all-time lows. And so I just want to talk about interest rates. What determines interest rates? What can we pay attention to if we're trying to kind of keep track of what's going on with them? So I know this is the number one question everyone asks. So let's just get it out of the way now. Keith, where are interest rates today?
All right. Well, again, thanks for having me. And thanks for the questions. So interest rates, and I have to throw out the disclaimer that it's not a rate quote, but just in general, kind of speaking general averages and assuming good credit, right around 3%. So recently we've been back under that 3% mark, and this is for, let's say, a 30-year fixed. But give or take 3%. 3% is where we've been ranging here for the past couple weeks.
Okay. All right. Awesome. And so, Keith, when we talk about, okay, the interest rates is right around 3%, if you have great credit, you could probably, get some really great interest rate. Of course, interest rates, your individual interest rates depends on your credit score and a lot of different factors that obviously a lender like you would look at in order to determine that. But overall, in general, in the U.S., who determines that? Does the Federal Reserve set interest rates?
Great question. So the Fed's fund rate, and when the Fed meets and you hear that the Fed has increased or decreased the interest rate, that is driving the overall market. But if the Fed increases their interest rate, say 0.25%, that does not mean that the 30-year fixed rate has increased that same 0.25%. Really, our interest rates are based upon mortgage-backed securities or mortgage bonds, and they're traded just like any other bond is traded in the open market, or any other stock is traded in the open market. When they trade at a higher price, interest rates go down. When they trade at a lower price, interest rates go up. So the Fed has an overall impact on the markets, but it's really those mortgage-backed securities and how they're traded on a day-to-day basis. That is what is driving the 30-year fixed.
Exactly. And so the mortgage-backed securities, we've been hearing that a lot, or actually what's happened over the last 10 years or so is that banks have, or actually the government has done a big purchase of mortgage-backed securities, and they continue to, essentially pump money into the economy, including the purchases of mortgage-backed securities, which then leads to lower interest rates. So how do mortgage-backed securities impact interest rates again?
Yes, when the mortgage-backed securities, so when they trade at a lower price, interest rates go up. When they trade at a higher price, interest rates go down. The government has been purchasing a large quantity of these mortgage-backed securities. So they've been injecting a lot of liquidity into this particular bond and a lot of other bonds, and that's been helping keep interest rates low, because again, them injecting liquidity, that's keeping that bond price high. When the bond price is up, interest rates are down. Now the talk is that, hey, with things going well and there's potential signs of inflation, which is not a good thing for bonds, maybe the government is going to ease off on that purchasing, which would cause that bond price to lower a bit. If there's not all this liquidity that's being injected into the market kind of artificially, then that would lead to interest rates increasing a bit.
Sure. And we've been hearing, some people, kind of set off the alarm of, do something if you're thinking about purchasing or if you're thinking about refinancing. You might want to consider doing that this year, because you never know what's going to happen next year. And you're right, there's talk about inflation and, the economy and how, interest rates might be impacted by that. But really, mortgage-backed securities is what we should be saying. Keith, you have been a guest on Live with Liz, and I've yet to ask you the two questions that I've been asking everyone who joins me on Live with Liz. And all right, so here it goes. Here's your first time. Keith Renno, what is your superpower?
That's funny. I've heard you ask others this, and somewhat prepared. So I tried to make my superpower. Marrying, talking to a lot of folks and hearing hopes and dreams and what folks want in terms of housing, which for most of us, kind of the American dream, and being able to relate what folks are looking for with what we're allowed to provide in terms of the numbers and given someone's actual financial situation, and being able to marry those two and guide and help. And as we know, oftentimes that's not a 1 or 2 day process, but maybe a process and a kind of overall guidance that could last a year or two for someone to really reach their goals. So I really try to work hard and say my superpower, being able to marry those two, the wants and dreams with what we're able to provide and making it happen.
Awesome. And Keith, what is the best real estate advice you've ever received?
Great question. So I think once you own it, to hang on to it.
Hold.
So not sell, hold real estate.
All right, awesome. Well, speaking of how things can be volatile, holding real estate is just one of those sure ways of building wealth and creating a good future.
Absolutely. Absolutely.
Okay. Awesome. Well, thank you so much, Keith. And if somebody has questions about interest rates or loans, mortgages, anything, where can they reach you?
Yeah, I mean, all my contact information on my website, keithrenno.com, or call me direct on my cell, 818-521-8515.
And I actually have one more question. I got this question on a private message earlier. Somebody asked, how good are pre-approval letters for? How good
are they long for?
How long are they good for?
Yeah, there you go. So technically 120 days. So when a lender runs a consumer's credit report, that credit report is valid for 120 days. But that means that the lender needs to be in position to complete the loan within that time frame. So quite commonly, you'll hear lenders, you'll hear folks say 90 days, figuring a 30-day period to actually complete the loan. But technically, credit reports are good for 4 months.
Okay, awesome. Well, thank you so much, Keith. I really appreciate this info, and I'll see you guys soon.
Thank you. Thanks, everyone.